Why don't we kick off this webinar? So this is a webinar called Why the Bitcoin Standard Matters. It's obviously with Michael Saylor and Jeff Park from Bitwise. I'm the CEO of the block, Larry Cermak. Now, what is Bitcoin Standard? I'm guessing mostly everyone knows, but ultimately the simplest definition is using Bitcoin as a primary reserve asset, similar to how gold or cash is used today. Now, obviously, things have changed a lot historically. I personally have been in the industry full time since 2017 doing research. We've gone from like Bitcoin's going to die to Bitcoin's volatile and wasteful to now Bitcoin's interesting to macro investors. Then it turned into Bitcoin's now adopted by companies as a reserve asset. Then it has become one of the key topics in the US presidential election. And now it seems like we're all almost starting to gravitate towards Bitcoin's now starting to be interesting to nation states. There's increased number of companies, including major public firms, that hold Bitcoin in their treasuries. Obviously, MicroStrategy, Michael Saylor here is a pioneer of that. MicroStrategy is now part of NASDAQ 100. It's the first public company to adopt Bitcoin as the reserve asset. That was in August 2020, almost 5 years ago. Seems crazy. Seems like yesterday. And they now hold more than 500,000 in Bitcoin, worth $45 billion. There have been other companies that followed MicroStrategy's lead. According to Bitwise's report, there's now 16% more of Bitcoin in publicly traded companies' treasuries, almost 700,000 Bitcoin, worth almost $60 billion. There's 12 new firms that joined since Q1, including Hong Kong's Mingxing and Japan's MetaPlanet. And a lot of these companies are using the argument of like, this is a hedge against inflation and fiat currency risks. Now we obviously also have Jeff on from Bitwise. Bitwise recently launched the Bitcoin Standard Corporations ETF, which is an ETF that includes companies with large BTC holdings. Obviously, MicroStrategy, one of them, also Marathon, Riot, and a bunch of other companies. Now, I don't necessarily want to blabber here. Everyone's here to listen to this interesting discussion between Michael and Jeff. So I'm going to give them the time to start speaking and interview. If you guys want, please ask questions in the chat. Towards the end, we're going to have time to ask Michael and Jeff questions about Bitcoin, Bitcoin as a standard, Bitcoin as a reserve currency. So please ask any questions, and now I'll give it to Jeff to kick off the interview. Thank you so much, everyone, for joining.
Well, thank you, Larry, very much for that introduction and for hosting this incredible webinar. And thank you, Michael, for joining us. I just thought maybe I would start off by sharing some stats that many of you may already know, which is performance of various market indices and stocks year to date. Most of you are not surprised to see the NASDAQ is down for the year. I see roughly today through down about 13%. And Bitcoin too has had a rather challenging start, down about 10% as I see it through today from the beginning of the year. But lo and behold, Strategy, formerly known as MicroStrategy, is actually up 8%. So I think already within there is some clues as to the kinds of conversations we're going to be having today. So maybe, Michael, I'll open it up with the broadest question, which is the name of our webinar. Why does the Bitcoin standard matter?
Yeah, well, I mean, you could summarize it as every company in the world is like a type 1 diabetic. That is, they're unable to store economic energy, or their capital is toxic to them. They're actually suffering from toxic shock. So the world consists of right now of two capital assets you could use. You either use short dated treasuries, and they're going to yield 2 to 3% after tax, or you use Bitcoin, which is yielding 50% plus. And the cost of capital is 12%, anywhere from 10 to 15% over the long term. But so if your capital asset gives you 2% and the cost of capital is 12%, that means that 10% of your capital value gets drained out of you every year. In essence, every company is losing 10% of their treasury a year in real value by using short dated treasuries. It's against regs. It's illegal for a company to capitalize on a security. And so the general solution would be you ought to buy the S&P index, but they can't buy the S&P index. So every company that generates cash flow right now is left with this awful choice. I either have to dividend the capital back to the shareholders, I have to buy my stock back, which is surrender the capital or I have to go and do a acquisition with the capital, and 95% of the acquisitions are dilutive mergers or disastrous mergers. You end up with these things like, a Google wants to pay like 60 times revenue, for a company. So why does the Bitcoin standard matter? For the first time in 100 years, companies have a capital asset, which is a commodity, not a security, which returns more than the cost of capital. That's the same as everybody on earth going from being a type 1 diabetic to having insulin to actually not being a diabetic. A type 1 diabetic will eat themselves to death. You can eat continuously forever and you will starve to death. And that's because you cannot retain energy. And companies are, in essence, starving themselves of capital. They're all negatively polarized to capital. They're repulsive to capital. They destroy all the capital they raise, and they're repelling it. The Bitcoin standard means your company becomes attractive to capital. You begin to attract it. The more capital you raise, the more shareholder value you create, the stronger you get. And so, to ask the question, why does it matter, is kind of like asking the question, why does insulin matter to a world full of type 1 diabetics? Or, why do you need to see, why do glasses matter to people that are nearsighted, right? It's so you can function. And that's, I think, the revolutionary opportunity here.
Very eloquently said. And it's not often that you get a once in a century event happen. And actually, I would also note to a more recent event that is now permitting corporates to actually adopt this journey in a way that is familiar to you having pioneered the space, which is that for a long time, there were FASB rules that made it challenging for companies to hold Bitcoin on their balance sheet at the value that they deserved. And I do believe one of the inflections that we're experiencing right now is that there is more standardization being adopted to treat Bitcoin fairly as an asset that allows companies to begin this journey with not the due risk that was once upon a time the case where when you had started, for example. Perhaps related to that, many people know you as a champion of the Bitcoin standard, but the reality is you're also a serial entrepreneur. You've been a founder in the space for many years. My question to you is, as you go out there, talk to other CEOs, other founders, other executives and CFOs, what are the kinds of those personas that you see are ready to embrace the Bitcoin standard? What are the commonalities you see amongst the qualities of these CEOs and founder types that you think is at the intersection of being an early adopter of the trends that you've been navigating?
I think when you've concluded that your conventional financial approaches and conventional business approaches are hopeless. Like, I hate to be, what is the word, dramatic, but I actually think you need to get to the point where you believe that it's hopeless to continue along the present path. And it's like asking the question, what's the characteristic of people that embrace a new cancer therapy? Well, the ones that have concluded they're going to die in 12 weeks if they don't. So if you've got a zombie company, or you have a company if you're competing head to head with a big tech monopoly or any kind of monopoly, when would you discover Bitcoin? You run a yoga studio and the government shuts down yoga studios for the next 4 years everywhere in the world, and your revenue goes to zero. Then you might discover Bitcoin, right? If the government shuts down your business with a law, with a regulation, or when a monopoly forms that makes it impossible for you to compete, then you've got nothing to lose, everything to gain. You're already going to zero.
Mhm.
So I think those are the people that embrace this, those that realize that they don't have a future unless they embrace a new idea.
Hmm. Hmm. Of course, the trend is hopefully that we can broaden the adoption to multiple use cases outside of those existential risks in the way that you can diversify your corporate treasuries. You would imagine at some level, maybe Ryan Cohen coming into the complex as we know it with GameStop as nonetheless a business that is operating today is pushing the trend towards different ways to imagine how Bitcoin can be additive to somebody's capital stewardship program. And maybe related to this too is this question of the board. Every company has a different type of board dynamic, and there may be some correlation between companies that are declining versus companies that are aspirationally improving, and the kinds of board makeups that could exist. How important is the board buy-in as you've observed from your experience of also presenting to Microsoft in the past and the ability to shepherd Bitcoin adoption at the corporate level?
I think the CEO has to conclude that the business, doesn't have a future without a radical new idea. Then the management team has to buy in. So it's really the CEO, the CFO, and the general counsel. Those are the first three. After that, then you need to get the board to buy in. And if you have one holdout member of the board, they can completely stop the process for everybody, unless, again, what kind of person goes to a doctor and gets a prescription for insulin, Jeff? Right? Like, it's kind of, if you think of it like that, then you kind of get the idea. If the company is healthy, like the problem with Microsoft is one of the Magnificent Seven, but they're called Magnificent Seven because they're the seven greatest companies on earth. But Microsoft arguably is like the Magnificent One. If you had to pick one company on earth that is probably the single most powerful company, they sell software. There's no supply chain. They don't have to manufacture anything. They don't have to ship chips. They're even right now in the tariff wars, they're the most insulated of the Magnificent Seven, because ultimately they're pretty much just licensing business process to 100 million companies with a near monopoly. So if there's any company that doesn't have to do anything, it would be Microsoft.
Mhm.
And then if you want the opposite of Microsoft, pick a company that's like a bakery in Ukraine that sourced its products from China, across a war zone. And, you get an example of the opposite extreme. So I think that ultimately the board matters, but I mean, first the business matters. You just have to have a business where they say with paradigm shifts, who embraces a new paradigm? It's the young or those in time of war, and there's the famous quote, science advances one funeral at a time. So traditionally, new ideas get embraced by the young because they had to wait for the old guard to die. And then certain times, like those that don't believe in the Air Force, their minds are turned when they get firebombed. And then they start to believe that maybe air power does matter. But in this particular case, yeah, the board is a stopper. They're not going to be helpful in changing the company. The truth is the CEO is most important in actually putting a company on a Bitcoin standard. And after that, you might have one holdout. My advice is if you have one holdout, you have to get them off the board.
Mhm.
Like if you were the CEO and you can't, I have talked to boards, by the way. I've talked to companies. I was like, well, you're $1 billion company. If you do this, you'll be a $10 billion company. And if you do it right, you'll be $100 billion company. And one person stops them. And you
Mhm.
have to ask the question, should you allow one person to deprive the shareholders of $100 billion? Right? And the answer is you shouldn't. But this all comes down to clarity and courage,
Mhm. Yeah,
and I think
absolutely.
Peter Thiel says courage is in much shorter supply than genius, and that's the most brilliant thing I've ever heard. Like there's 800,000 geniuses in the world,
Mhm.
but how many original thinkers are there in the world that actually are willing to take a courageous stance? It's a lot less than 800,000.
This speaks volumes to me. I think in many ways what you're alluding to is that the journey of crypto adoption between the individual versus the corporate versus the sovereign is actually more similar than we think. Take, for example, the individuals that were willing to take some risk with Bitcoin on some margin. They're being radical about that choice at a level where making different risk preferences versus somebody, as you point out, who might be complacent in the way that the life of that they built is working for them in the ways that the system supports. Same with sovereigns, as the US leads the path in how thinking about the strategic reserve, and then you may find emerging markets actually are more involved because of the radical approach they need to take to fix their fiscal deficits. So why would we expect any different from corporates? One thing to notice, which is super exciting to see, is that the number of public companies holding Bitcoin has been going up. I think Larry had mentioned it's now close to 80 plus that exist, and it's actually a lot more when you include some of the global companies. What are kind of the cultural differences, if you've noted any, that you see, and cultural similarities in the companies that at a global level are finding their path to Bitcoin adoption?
I think generally they have CEOs that are risk takers that are fairly entrepreneurial, but also they've got a history of struggle, right? They're not the blue bloods that were born with everything uh, teed up for them, right?
Hmm.
They had to fight their way up, so they're scrappy. I think if you look at the Russell 2000 and look at the bottom 1,000 of the Russell 2000, right? Those are the companies that are kind of what is the word? It's like they're kind of in this zone where they're successful companies by normal standards. Like out of the 400 million companies in the world, they're the top 1%, but they're not the top 0.01%. You know, Jeff, I feel like it's the second sons, like who
Hmm.
settled the United States. They talk about it. They're like, well, the second son of nobles, right? The first son inherited the estate and stayed in the old world and got rich, and it was kind of a guaranteed thing. And the second son had to go off, or the third, and had to make their way. So it's like my path forward in the old world is blocked, but I know I'm just as smart, and I'm harder working than my older brother. I'm going to get on a ship and I'm going to sail to the new world where I can get like 4,000 acres in the Ohio Valley, and I'm going to make my way. And so the companies that adopt the Bitcoin standard, right? We say it's on a need to know basis, but yeah, there's no more pernicious thing to hold you back than not needing to, right? Like the vote with the Microsoft board matter was 99.5% against investigating Bitcoin. Like
Hmm.
99% again, if you're comfortable, right? If you're comfortable, then you're just not going to. So the first sons aren't likely to get on the wooden ship for 4 months and sail to the new world and then risk 25%, death from this or that and the other thing and then fight. But the second or the third son thinks, well, I kind of don't have a choice. I have to.
Yeah.
And so it's the disenfranchised, but it's not the completely. It's not like the 399th big millionth company. It's actually a company that's got $100 million, $1 billion. It's got actual assets, but the likelihood that it's going to displace Nvidia or Amazon, like how many companies failed competing against Amazon? How many companies failed competing against Microsoft? How many companies failed competing against Facebook? Right? How many companies failed competing against Apple? I can give you 20,000 good companies, really well run companies, and they all were smashed by Apple or smashed by Google or smashed by Amazon. Like anybody ever worked in retail? It's like 20,000 good retail companies all destroyed by Amazon and or Walmart. And they weren't bad people.
Yeah.
It was just hopeless.
Well, I think there's something interesting you're mentioning there is the inevitable advantage of scale, right? And the cost of financing that can also come with large companies that are off markets to smaller businesses. And one thing Bitcoin does is actually it can turn the financing model upside down in the ways that you can think about cost of financing differently with Bitcoin access that could give you an edge differently than the big companies relying on their incumbent treasury management functions. And so when I think about what Bitwise is doing in this space, in, for example, launching an ETF that is tracking companies that are buying Bitcoin on their balance sheet, is the idea that if there are flows to consumers who want to support companies that are involved in this space this directly, part of what ETFs and indices do is actually they subsidize cost of capital by allowing your equity to be permitted to grow in ways that reflect consumer values. And I think about a world in which some CFOs may one day decide actually, inclusion into an index, for example, will cheapen their cost of capital because it brings new investors that care about Bitcoin. And those things can actually then become more powerful to thinking about a cost of financing advantage from a treasury service. And that to me feels like a really important mission that Bitwise can help steward, helping companies compete more successfully on the financing front against, as you mentioned, these big balance sheet companies that have off-market terms. Maybe with that, we can pivot specifically to strategy, formerly known as MicroStrategy. In your vision of capital stewardship, what is your plan as you see where MicroStrategy is going to go in the next 5 years? And then let's also kind of close our eyes and imagine a little further 10 years and walk us through the evolution of what you expect strategy to look like.
Our business model is to securitize Bitcoin. So we're a Bitcoin treasury company. That means we hold Bitcoin as our primary treasury asset, and we offer securities to investors that they need to give them they slice various risks of performance, volatility, and risk off of Bitcoin. So some people want low risk, low vol, low performance uh, securities. And to them, we would sell them a preferred stock like Strife or convertible preferred like Strike or a convertible bond, right? The convertible bonds are like 70 delta instruments, and Strike is a 30 delta instrument, and Strife is a 0 delta fixed income instrument. And one of them looks like a 20 vol, and one of them looks like a 40 vol, and one of them looks like a 60 vol. And then when we take the leverage from selling those securities, uh, we feed that back into the equity so that the equity itself ends up being higher vol, higher performance than BTC. So we take, if BTC was a 60-60 type instrument, 60 vol, 60 performance, we aim to create a 90-90 equity
Mhm.
because some people want 90 ARR and 90 vol. And then we aim to give somebody else maybe we want to give someone else the 60 ARR 40 vol, with a
Yeah.
strike or with a convertible thing. And maybe we want to give somebody else the 30 ARR 30 vol type instrument. So we're giving people different tranches of volatility, risk, and return. And then, of course, the equity itself is the building block for a whole host of derivatives. So you can build the entire options market, and there's like a massive, like $70 billion open interest in the options market. And then you can build other ETFs, right? The levered ETFs, the volatility interest generating ETFs, the short ETFs, every other flavor of derivative. And our position is, our job is to do what everybody else can't do. So for example, you can sell, if you're a trader, you can sell covered calls all day long. So I'm not going to do that because you can. What
Mhm.
I'm going to do is create a convertible preferred stock because you can't.
Mhm.
So what we're doing is we're creating those various securities, everything from a pure currency swap. Like, for example, if I give you 10% interest and you give me back money and I'm generating BTC yield and you're generating USD yield, that's a pure currency swap. I could do that in Canadian. I could do that in yen. I could do that in euros. I can do that in USD. So that's one type of security. And then above it, I can create the convertible, various flavors of some yield, some conversion rate, all the way up to pure Bitcoin or high octane, high leverage Bitcoin. And for us, we're always going to aim to make the equity like 1.5 to 2x Bitcoin. And I can't, it's not clear to me how I get much beyond that. But then we leave it to the rest of the financial market to concoct 2x to 200x leverage by using all of their option interest, option tools, et cetera. And at the end of the day, the result is everybody gets the flavor of volatility, the amount of volatility, the amount of performance, the amount of risk that they want in a liquid fashion on a compliant marketplace, right? That's our mission. It's not going to change, right? Everything we're doing, you can do at the scale of $100 billion enterprise or $200 billion enterprise or $400 billion or $800 billion or $1.6 trillion or $3.2 trillion or $6.4 trillion, right? It's pretty much the same exact structure. You're just creating more of each type of security. And the thing that makes it possible is that you're building on top of a foundation of a digital scarcity, which is a commodity. Which itself, right? Bitcoin can scale from 2 trillion to 20 trillion to 200 trillion. So to 400 trillion to whatever trillion, right? So everything is very scalable in all directions as long as you maintain a balance in the capital structure between the various instruments.
Yeah, yeah. And it's funny to see now everyone is copying what they call the MicroStrategy playbook to imagine a similar investing wrapper for other crypto assets. So we're seeing Solana entering the arena in different operating company vehicles to imagine what a levered vehicle structure could look like. There's discussion around a version of that for Ethereum. And essentially what we're talking about here is maximizing and optimizing the volatility of the underlying asset to create different risk preferences that people may seek for yield in ways that are not permissible in other traditional assets. So when you look at a balance sheet, right, for example, you have an asset side on the left and you have liabilities on the right. And the things you're discussing here are innovations on the liability stack of what you can create from leveraging crypto and Bitcoin in particular as the asset. I want to come back to the liability innovations, but first, just focusing on the asset side, which is now MicroStrategy owns over 530K Bitcoin. It's a steward of the ecosystem. I think now about 3.3% of the total Bitcoin supply is held by corporates, and it's going to increase. And so there's this question of governance. I often hear a question of crypto community investors trying to understand better, is there going to be an evolution from just passive ownership towards more of an active governance model in which people are going to start to care about the actual ethos of the companies behind representing a stewardship of Bitcoin? And I'm curious to hear your view on where you think strategy fits uniquely from that perspective.
Yeah, well, I can't let your previous comment go unchallenged. I'm showing you how to build 100-story building using steel, which is Bitcoin, a digital scarcity. To equate Ethereum and Solana to Bitcoin is like equating balsa wood and clay bricks to steel. And yeah, you can also lever them, but you can lever balsa wood, but levering, you can build lots of things that are steel containers and you can use rubber bands, but it's not the same thing. So there's a reason that securities law prohibits public companies from capitalizing on securities. And the reason is because you can lever a security 100 to 1. And so if I actually issued 1% of the float of a security, I could take $10 million and create a $10 billion market cap company. And so you would literally have 10 million in the float. And then you would tell yourself you had $4 billion of collateral on your balance sheet after you levered it up. And then you would start to act that way. And then when the bottom of the structure comes crashing down, you get a situation like Terra Luna or like FTX. Both of those were examples of companies levered on proprietary tokens. And so Solana and Ethereum are, you know, they may not be securities, but they're definitely tokens. And as tokens, they're not a commodity. And so I would caution anybody listening here against levering up on a token, right, or a proprietary asset, because it's kind of like trying to copy my skyscraper and doing it with bricks or with aluminum or with copper, right? The entire thing's going to buckle and lots of people are going to die and it's going to be a catastrophe and you're going to take out the entire city block. And that did happen. It has happened over and over again in the crypto world. Happens all the time. People think that they discovered leverage, and what I'm doing is not an intelligent or brilliant idea because I'm using leverage. The reason it works is because I'm putting leverage on steel. I'm doing it with the right material. I'm actually using a product which doesn't deflect, right? And so Bitcoin is a crypto asset which does not deflect. That's why you can lean on it with $10 billion of leverage or $100 billion of leverage. And if you do the same thing with FTT token or Luna, or pick your favorite token, if you do the same thing, you're going to find it will buckle at some point. And when it buckles, there's going to be catastrophe.
Ultimately, that is why this webinar is called the Bitcoin standard mattering and not crypto standards mattering. I, for one, do agree with you that the hardest money, the scarcest capital that we know today is exclusively Bitcoin. And the leverage you can build on Bitcoin is fundamentally proprietary to Bitcoin versus others. So would echo the same sentiment back right at you.
You know, after 10,000 years, people haven't come up with a better material to build a ship with or a building with than steel. It's like, there's a lot of other metals and a lot of other materials and a gazillion, million, whatever alloys, but it oftentimes happens in nature that there is one best answer, and the best answer is good for 98% of all the applications. And everybody that ever came up with the different, you know, the crystal ship and the diamond ship and the rubber ship and the wooden ship and the aluminum ship and the whatever, and it's just like, it was good for a little bit of time, and then it hits a hurricane and it snaps in half and it sinks and everybody dies. And they're like, well, I got, you know, never done that before, you know? So I caution that degree of innovation, right? Like, you have an answer. God gave you the answer. You know, you can either embrace the answer or you can insist on being different, right? And I would advise that if you want to build a different city, don't innovate in the dimension of steel. Keep the steel, right? Pick a different way to innovate. Maybe make the boulevards wider or something like that, right?
Yep.
So coming back to Bitcoin companies, I think the key with Bitcoin is the protocol itself is stable. Nobody can censor the network. It's distributed enough. No one can censor or corrupt the protocol. No one can control the price. It is sufficiently decentralized and global that no company, no country, no capitalist has enough influence to be able to put it at risk. And it is the one thing that we can all agree on in that regard. So when we go to the question of companies adopting the Bitcoin standard, Jeff, I think the primary guiding principle is you want to do this well. The question is, are you going to adopt Bitcoin as your primary treasury reserve asset? That means like flip 90% of your long-term capital to Bitcoin, right? 5%, 2% doesn't really do the job. You really want the vast majority of your long-term capital. Substantially, you want 100% of long-term capital to be in Bitcoin. And I define that as you've got working capital. If you need $50 million in working capital, then you hold that in the fiat currency of your liabilities. Everything else is long-term capital. You flip that to Bitcoin. And then after that, right, you've got two parts of the business. You've got the operating business, and then you've got the treasury, or you've got the balance sheet part of the business. I don't have any advice to people on the operating part of the business. Every single operating business is different. The only thing you can say is that 0.1% of operating businesses are good and 99.9% of operating businesses struggle at all times. I mean, that's the big piece of wisdom I have for you. If you feel like your business is under pressure and is difficult and challenging, that makes you one, of the 99.9% that feels the same way. The only people that don't feel that way are the ones that run the monopolies, that are either state-sanctioned monopolies or digital monopolies, and everybody else struggles. And so there's no simple unlock there. I'm going to tell you, get a monopoly from the government of the local country you operate in. That's my suggestion. Or maybe you're lucky enough to be Apple or Google or Microsoft. But if you're not, then the operating business is all about finding a monopoly. And it's not easy to fix that. It's pretty obvious, right? It's quite obvious. It's hard to be better than Amazon or Microsoft or Apple. So the real advice is focus upon the balance sheet, where it is very easy to be better than the US dollar standard or the fiat standard company. So that's the part of your business you can fix. You can fix your balance sheet. And most people don't. Like, most people don't focus on that. They put 98% or 99% of their effort into their P&L, and they're basically pouring 99% of their focus and their energy in a losing cause, and they're not going to win. And they're putting 1% into their balance sheet, where you're 99% likely to succeed on the balance sheet under the Bitcoin standard, and you're 99% likely to fail in the operating business on the fiat standard. But conventional wisdom is to focus on the operation and dismiss the balance sheet. And if you want to escape from that dilemma, you have to invert that, and you have to fixate on the balance sheet, and you ought to play defense with the P&L. You're a dentist. You're going to keep being a dentist. You're not going to grow 25% a year forever. You're not going to crush Apple and Amazon and Google. You're a dentist. Just run a profitable dentist practice, and then take all the money from the profitable dentist practice and buy Bitcoin with it. And if somebody wants to give you a massive loan against your dental practice, mortgage the dental practice to the hilt, borrow $10 million, buy Bitcoin with it, and you'll wake up and you'll be a billionaire, not because you made $1 billion in dental fees. You'll be a billionaire because you were smart enough to borrow money against the dental practice, buy Bitcoin, and it 10 to 100x from there.
See, I think what you're alluding to is that there's so much permutations within financial engineering that can be done upon the ability to just own Bitcoin. And the thing that I'm really excited about is that there isn't one way to do it correctly. I think everyone can do it in different ways. And you, for example, have built a diversified liability stack across preferred equities to convert Bitcoin. Some may choose not to do some of those instruments or all of them in different ways. There's discretion. But also on the asset side, you mentioned Bitcoin Bank as one of the journeys that Strategy is on. And that means actually the assets have to start maybe becoming productive too, right? We're talking about the idea of actually making even more incremental yield on the provisioning of the assets. And you can start imagining different companies approaching that yield bogey in a different way. Maybe it's some kind of lending business. Maybe it's some kind of volatility harvesting business on top of the asset ownership. Maybe it's actually doing things in the layer 2 sidechain ecosystem of Bitcoin as it continues to grow as a security model. And there's all these kinds of clever toolings that companies can start doing. And it'll actually, I think, come to a world where everyone will say, I'm a Bitcoin standard company. But then if we're all doing our homework, if we're all leveling up, the next question will be asking, well, what kind of Bitcoin standard company are you? And then those are the things I think that could be really interesting over the next few years as more companies adopt to it. In terms of the asset side, do you think Strategy will one day do more things with the Bitcoin to have it yield productivity? Or do you like the fact that it's a clean, knowable, kind of cold custody proxy Bitcoin risk for the market to feel a security guarantee that you think is actually better relatively?
I think all the rehypothecation experiments have all crashed and burned over the last decade. So I don't think they've got a good track record. I think that all the layer 2 type applications, they're always very interesting to programmers, but no one's figured out how to scale them without some technical instability. You run into massive amount of technical problems, massive amount of security issues, and then massive amount of regulatory issues to do that. So I think that the best way to generate yield and generate a return is you buy the Bitcoin, you hold the Bitcoin in cold storage, and then you sell equity at a premium. That's the risk. You know, when you're selling equity at 3 times NAV, you're literally selling dollar bills for $3 all day long. You
Yeah.
have a money printer. Okay. It's a risk-free money printer. So why would you do anything else if you could literally sell dollar bills for $3 all day long? And so the creation of high volatility, high optionality public equity, and then bonds, convertible bonds, fixed bond, corporate bonds, or preferred stocks. All of those are by far the best, lowest risk way to generate yield off of the underlying Bitcoin. They solve the compliance issues, right? Because you're selling a compliant security on a compliant exchange. So you don't run into this issue where you did something really cool that is illegal in the state of New York, right? Or it's illegal somewhere. So they solve the compliance issues. And then they also solve the scale issues. If you have a good bond, someone will buy. I've had meetings where someone gave me a $500 million order after the meeting.
Yeah.
Like, can you sell $50 million of something in 20 minutes? I've sold $250 million of something in 20 minutes. So if you want to scale the business, if you want it to be compliant, if you want to generate substantial material yields, then I think you want to do it by issuing securities. And of course, there's one ladder of securities in Japan, which are different than securities in America or US, which would be different than Brazil.
Mm-hmm.
That would be different in France, different in the UK, different in Germany, different in Switzerland, right? Different everywhere in the world, in Canada. So basically, securitizing Bitcoin in some kind of wrapper, it could be as simple as, okay, here's an ETF, but it could be here's a 2x ETF. It could be here's a Bitcoin-backed bond ETF. It could be here's the bond. It could be something else. It could be here's the option. Those are all the most compelling ways. I think the reason that certain people in the crypto industry don't embrace it is they don't have the technical financial capability to create these compliant instruments in these markets. So they go for the crypto token approaches, or quote unquote crypto native. But the bottom line is the crypto native approaches are only 1% of the opportunity, and they're 100 times as hard. And so the real money here is going to be made by more conventional financial firms that are going to issue $100 billion worth of Bitcoin-backed bonds, and then $1 trillion of Bitcoin-backed bonds. And then when people go, oh, well, $1 trillion, I guess, is saturated, then they're going to issue 10 trillion of Bitcoin-backed bonds. And people watching are going to complain that it just seems too simple. Right? It's like, and what I see a lot, Jeff, in this market is I run into crypto people that have been in the business for a decade, and they have very complicated ideas that don't work.
Yes.
And I offer them a simple idea. I'm like, here's an idea. You're a public company, sell your equity, buy the Bitcoin. They're like, no, that'll never work. Okay, well, I guess it might work. Well, what if the Bitcoin goes down? Well, blah, blah, blah. Okay, I guess it worked. And you know what the latest pushback is, Jeff?
Let's hear
The
it.
latest pushback is, well, it worked for you, and it worked so well that you're the winner, and there's no room for another company to do it in the market. So we literally went from, I don't think it'll work at all, to it might, to it did. Oh, it worked too well. That's my excuse for why I'm not going to do it.
Yeah.
And people just come up with these gigabrain excuses for why they don't want to do the simplest thing in the world. And the reason it works, by the way, is everybody wants to be able to buy the equity and borrow against the equity from their existing wirehouse. So like
Mhm.
MSTR, you can borrow against it from a big bank. They want to be able to sell the volatility to generate yield on us. You can do that by selling the covered calls, right? They want to be able to, they want to solve the custody issue. I want to call my Merrill Lynch broker and buy $10 million worth of it in like 15 seconds. So
Yep.
if I can, it's convenient,
That makes, yeah.
compliant, it's conservative, it's simple, we're just solving these very simple ideas. It's like, well, how about this one? I just like to buy the upside with no downside. Like our convertible bonds are outperforming Bitcoin right
Right.
now. Like so why wouldn't you buy something which outperforms Bitcoin, but you have a credit guarantee and you're senior in the capital structure.
Yeah.
So the simple ideas are working, simple compliant ideas. The hyper complicated ideas, they're 100 times as hard, they're 1% as valuable, they're not working. And my advice to anybody is don't try to do those things. Focus on the simple ideas.
I love what you shared there. I think so much of the crypto journey for companies and people begin with a little bit of a profit motive and wanting to make money. And then that's tooling to start understanding what's actually happening underneath the hood, right? And, we talked so much today about the financial engineering innovation to draw investors in because that's kind of what Wall Street cares about. They care about these numbers and it's a little bit of like a mousetrap. But in the end, what they're going to walk away realizing is that there is a very strong values commitment to the Bitcoin standard too. So to the pushback you've gotten around companies saying, hey, I can't succeed now because you're the game in town. So why would I do it? What I would challenge back and why I think it's so important that Bitwise leads the mission with the Bitcoin standard corporations, ETF, and index is because there's going to be a moment where consumers actually start caring about the companies that they support in the ways that they buy products from. I truly believe, much like the ESG movement was a way to appeal to a generation to care about a particular ethical or political topic, Bitcoin will play the same role. And so, for example, when you see companies like, Heritage Distillery, which makes a tasteless liquor called vodka that you all know, there's basically no difference between these brands you may, as an end consumer, now recognize, hey, Heritage Distillery is a Bitcoin standard company. And so I'm going to buy their vodka. And that is, I think, a momentous time in which the Bitcoin standard can really also give a lot of subsidy, a boost to their businesses to compete differently, which is going to move away from just the financial engineering thing that you've so focused on innovating to bring the people in, but eventually it'll evolve into something bigger, less monetarily driven, and something more societally important.
I agree with you. The biggest no-brainer for every single company in the world is just flip their treasury to a Bitcoin standard. I mean, immediately they get the benefit of becoming capital attractive or positively polarized to capital, and they start making money off of their capital. But the secondary benefit is it really improves their brand, improves their marketing effectiveness.
Okay.
And the tertiary benefit is it'll get them into these indexes, right? It gets them into the crypto indexes.
We'll
So,
keep it their cost of financing, and it'll be a virtuous cycle.
and the cliche thing would be to say it's an IQ test. But again, back to Peter Thiel, it's really just a courage test.
I love that.
It's do you have do you have the courage to actually take a risk to 10x your company stock?
Yeah.
And you kind of just have to look at the people running the company and ask, does that CEO have the courage to take a risk? And then, and to your point, the CEO is only as good as the board. So, like when Steve Jobs, when he took over Apple Computer again, he required that the existing board resign and he appointed all of his own board members. So, if you have a leader running a company and if they have a supportive board, then they have this opportunity, which is just to flip the polarity on their company and make their shareholders a lot of money. And then the question is, do you do you want the money more than you want to avoid being embarrassed?
Mhm.
Right?
Great.
And the world's full of people. It's like, do you want to win or do you just want to not lose?
Yeah.
And a lot of the people in the world just want to not lose, right? A lot of very successful, famous, rich people that they just don't want to lose. And because they don't want to lose, they give up the chance to win.
Great framing. And I love the comments about courage, for which you demonstrated such early commitment to. I know we're kind of cutting close to the hour limit here, and we did have some questions. So, Larry, I'll pass it back to you to see if we can draw up some from the crowd and our community.
Absolutely. Yeah, I appreciate it. We received like close to 100 questions, so this is going to be tough with the time that we have. But the one that was kind of repetitive for Michael was, is there a ceiling that MicroStrategy has in mind in terms of how much Bitcoin it can hold, or is it kind of unlimited and really depends on what is happening in the market?
No, we'll just keep buying, right? The price is going to go up. It's going to get exponentially harder, and the price is going to go up exponentially higher, and we'll just keep buying. And at some point, if we get to 5% of the supply, Bitcoin's probably going to be 1 million a coin. And if we get to 7.5% of the supply, Bitcoin will be 10 million a coin.
Yeah.
And then we'll be, if I'm lucky enough to grind to 10% of the supply, Bitcoin's going to be 50 million a coin, and someone will be whining that whatever, we have too much Bitcoin, but other people will have $400 trillion of wealth, so, our view is it's a ratchet, and we're just going to keep cranking on the ratchet, and there's massive leverage here. And I think everybody's winning if we do that.
Hey, can you quickly touch on how you plan to make some of the assets productive directly on the balance sheet, or is there any plan? I know you touched on it previously, but I don't think you were
No, the
ever
point
like
the
really
point is
specific.
they are productive. That's what people keep missing. Like, we generated $12 billion of BTC gain last year. That's like earnings to the common stock investors. We've set a target of $10 billion or more of BTC dollar gain this year. That's like earnings. It is productive, right? And how is it? It's kind of like, the frustrating thing is, say I owned 100 acres of Manhattan, and I owned it, and you put buildings on it, right? And then you said, well, when are you going to make the 100 acres productive? Well, they're holding the buildings up. I'm getting paid rent. Like, I'm holding the buildings up. It is productive. If the Bitcoin serves as collateral to the convertible bonds, to the preferred stock, and to the equity, and to the options market, it is productive, right? That's why we're succeeding, because we're able to see it in a different way than other people. You don't need to rehypothecate it. You don't need to. It's like, you don't need to juggle the granite blocks. You could just put the building on the granite block, and it would be productive. So we're using it as collateral. And you're like, well, how valuable that? Well, if it's worth 10 billion last year or more, then at the point it's worth 100 billion a year, aren't we making more money than everybody else in the entire financial world just by using it as collateral? Why do you need a second idea? I mean, it's perfectly fine now.
We also received a bunch of questions about proof of reserves. Overall, as a concept, what do you think about it? But also in context of MicroStrategy actually eventually having one, and if there are some limitations when it comes to public companies actually having a live proof of reserves system.
I think we're studying that. I mean, we're studying how we might use zero knowledge proofs, or use various architectures to do that in a way that don't create security risks. There's no way that we want to expose wallet address information or things like that, because it creates security risk. But if we get to a point where we decide there's an architecture that we like to make it available, that passes all of our own internal security controls and compliance controls and accounting controls, and I think that we could probably do that. It'll probably happen at some point, but the question is, with what architecture and on what time frame.
One more recurring question was about nation states and their exposure to Bitcoin overall. There have been some central banks, like the Central Bank of Czech Republic and a few more, that have publicly said they want to get exposure to Bitcoin. I'm guessing you're also part of some of the private conversations that are happening. They're maybe not necessarily public yet. Can you tell us a little bit more about the trend that you're seeing on that side? I know we talk more about companies.
I think
Any
the
idea?
trend is just people talk about it. As I just said, the people that embrace Bitcoin are either the young that have everything to gain, nothing to lose, or the hopeless. And that happens at the individual level, the family level, the corporate level, and the same would be true with the country. The hopeless or those with nothing to lose, maybe. Right now, people will talk about it, but I don't know there's much more to be said than that.
Maybe one last question. There was one that asked about your thought for Bitcoin as store of value. Jack Dorsey previously said that it has to also be medium of exchange, and it has to be slightly more productive than just store of value. What's your opinion on that personally?
I don't agree. Like, gold is not a medium of exchange and it's worth $20 trillion. Real estate is not a medium of exchange and it's worth $300 trillion. The S&P index or, equity is not a medium of exchange. Art, Picassos are not mediums of exchange and they're worth a lot of money. So the world's full of sports teams are not a medium of exchange and they're worth a lot of money. In fact, one could argue that every rich person on earth is rich because they own something that is not a medium of exchange, right? Name one person that's rich. Name a person, is anybody that where the majority of their wealth is holding an asset that is in a medium of exchange. So I think there's $1,000 trillion worth of stuff in the world that's not a medium of exchange, and it has value because it's capital. So in this particular case, my position is Bitcoin is capital. And what's the value of it? The value of it is that there's people with $500 trillion of wealth that want to keep their money, right? And right now, their money is being destroyed at the rate of 3 to 5% a year. Think about every single capital asset on earth right now that's being debased by inflation, by tariffs, by war, by chaos, by entropy. So right now, that's a $10 trillion a year lapse. If you could avoid losing $10 trillion a year, right, what would that be worth to you? Right? A lot. So I think it is, by the way, it's important that you be able to settle peer to peer. Like, I think it's important that you be able to self-custody Bitcoin. I would agree on that. I agree. I agree that any of 400 million companies should be able to custody Bitcoin, settle Bitcoin, trade Bitcoin. But I would stop short of saying it needs to be a medium of exchange. I think the medium of exchange is simply a currency application. And I think that maybe, the value of that is $10 trillion or something. I think the value of capital is $500 trillion. So I think the store of value is so much greater than the medium of exchange that it's a mistake to focus upon medium exchange. I think that's a very competitive market, right? The yen, the euro, the dollar, the ruble, the real are all going to compete. It's a competitive market and it's not worth nearly as much. And also, I think that if you're a company or if you're a citizen, you can hold a store of value asset comfortably. Bernard Arnault, Jeff Bezos, Bill Gates, Mark Zuckerberg, right, and Elon Musk, they can all hold $100 billion worth of non-medium of exchange assets and be wealthy and powerful and influential, and it's non-controversial. So the issue is, do you want to win or do you want to fight? And my view is what you want to do is you want to win, right? I'd rather win and not fight than fight and not win.
Mm-hmm. Yeah. Well said. I think you're also alluding to the fact that the medium of exchange by definition cannot be volatile, and most wealth creation activities take volatility, and that is a fact in the ways that the monetary system exists. One thing I would just maybe plug at the end as we wrap things up here is that the Bitcoin standard, as first coined by Safety and Moose, really in his book, envisions this idea of Bitcoin promoting a world that's more stable and it's more free and it's more prosperous. And it's all grounded in these principles of individual sovereignty that Michael, you're just talking about, including deflationary principles. And I do think part of the mission that we're all on together here as a group, as an industry, is to continue promoting the broad adoption of Bitcoin at the corporate level. So they too, as companies,